Martin North, John Adams, in the interest of the people. Hello, John.
Hello, sir.
So this is it.
Yes, I have had a lot of correspondence, a lot of people on the phone with me over the last few weeks, and they have said, when are you going to reveal this solution to the paradox? Now, one of the reasons why we haven't done it is because the last few weeks we've been focusing on bail-in, which is another very important topic, and with the inquiry and everything, I thought it was important to focus on the important the urgent as opposed to the important. But we did a show about 7.5 weeks ago, and what I did was reveal a range of facts and said that if you can solve these facts, your life will change forever. Now, that is a very big statement. And what I did was, at the end of the show, is I said to people, if you have a guess as to what this is, feel free to come back to me. Now, I did receive hundreds of emails. I would say about half of the people who emailed me knew the answer. Maybe, to be honest, 2 people who had a very detailed understanding as to why the paradox actually exists. A lot of wild guesses, but it's a very interesting exercise to see what people believe, because what we're going to reveal in this show is not only the answer, but what we're going to, I will highlight, and I'll speak for myself in this instance, Martin, is conventional economics doesn't actually explain the facts that we presented in the show. And if you can't explain it through conventional economics, there has to be another alternative explanation. And the reason why I asked people to go watch The Matrix was because to get to the final answer, and to be honest, I've been looking at this for several years, and I've gone into a lot of technical detail personally, and I've written some stuff on my website about it. But to fully comprehend what I believe is going on, you have to discard everything you understand about the world, and you have to reimagine the world in a completely different fashion.
And I guess, John, the point here is that people could easily say, oh, yeah, you're going to go down the conspiracy route and, rabbit holes and all those things, right? Firstly. And secondly, of course, you have other interests. And so some people will say, well, of course, your other interests are cutting across your objective independence. So we have to be able to deal with both of those as we go forward.
Yes, we will address those, but I just want to refresh the audience in terms of, well, what was the 4 facts that we said about 7 weeks ago? Yep. So now the fact 1 was, and we'll put these on the screen. Fact 1 was a particular product in Australia had its highest price in January 1980. According to the RBA's data, the money supply, broad money, had gone up from January 1980 to the end of 2019 by 2,593%. The supply of the product, the actual physical supply of the product worldwide, had only increased by 100% from late 1979 to 2019. And yet, by the end of 2019, the price was 42% lower. Now, the key thing on this, Martin, is to understand is this price. There's only one product in Australia that fits these facts. In the last 40 years, we've had massive amounts of money printing with the growth of the money supply, and basically everything in Australia is more expensive, except for one thing, and that one thing is, when you understand it, it has quite a bit of significance. Now. I had a whole bunch of answers, some very conventional answers, some very interesting answers. So I mean, I've got a list here of some of the answers I've got. So a lot of people said gold. Some people said silver. Some people said wages adjusted for inflation or the unit cost of labour. Because and this was interesting for me was because we all know that in terms of nominal wages, that has gone up. So, what is the minimum wage now? $22 an hour or $32 an hour, whatever the case may be. Well, we weren't being paid that back in 1980. So they said, what about adjusted inflation? So no, this is a nominal price. This is not adjusted for inflation. Some people said uranium. We had oil. We had water. We had electricity, airline tickets, baby formula, milk. Now, someone said blood, and I sort of said to them, well,
how?
Yeah, where's the price chart for blood? I mean, I found that interesting. Some people came up with humans, and then there was a couple of suggestions around technology. Now, even on technology, you could say that certain products have lowered in price because of technological innovation. But we had some very specific facts here, particularly about this price being at its highest in January 1980. And so like I said, half the people knew the answer, and the other half we had some very interesting ideas. And I didn't want to reveal the answer straight away. So when I did get a false answer, I said to people, guess again. And some people did come back again and again. And then there were people who said that they spoke to their friends and family and people around the coffee table thinking, what is this paradox all about? So the answer is silver.
Yes.
And there is only one commodity, one product in Australia that actually fits that. Now, how just to explain why is it silver. So this is a price chart that I've developed going back using the data from the Perth Mint. So the Perth Mint has data going back to the 1970s. And what we can see is that in Australian dollar terms, now a lot of people who look at the price of silver, even in Australia, they look at the American price. So the American price is slightly different, that behaviour, compared to the Australian price. But in the Australian price, the highest was about $44.82 per ounce in January 1980. And when we had the last bull market in 2011, it didn't go above that. Now, in American dollar terms, the peak was in 2011, but in Australian dollar terms, the peak was actually in 1980. And then when you looked at what the price was at the end of 2019, it was at $25.90 per ounce, which is this 42% lower than where it was in January 1980.
But one question. Your chart shows a very, very high spike just in one point of time.
Yes.
Right? Is that not an anomaly? I mean, why aren't you taking an average? Because that would completely change your story.
That spike is quite significant. But the point I wanted to make is from that spike, what has happened with the money supply? It has exploded. And everything else has gone up in price. But this price has gone down, and this is the only price in Australia that has gone down from 1980. So even though it hit a peak,
but other commodities didn't do anything like that. There wasn't the same big spike. So my point is, what happened then? Because you could actually be arguing from a false premise if, in fact, something happened there in 1980 that pushed it way up, artificially high, and then it came straight back down again.
Well, so there was a couple of things that happened in 1980. So one was we had the end of the stagflation era, and obviously in 1980 this is when Paul Volcker was raising interest rates quite dramatically, and that dramatic increase in interest rates that went above 20%, that got inflation under control. So that was a big phenomena that led to why did it start to come down. But the other thing that was happening was the Hunt brothers were cornering the market, and in order to get re-establish control of the market, the banks and the government changed the rules in the trading system that basically led to the Hunt brothers going bankrupt, and that was able to collapse demand in the market and to push the price down.
That says that there was some weird behaviour going on there which forced it high.
Yes.
Right? And then it came back down to a more normal level.
But the key thing is, so when you think about gold, so we've had, again, a massive increase in the money supply. That is a reflection of the value of the currency going down. So when gold particularly goes up in price, it's not that the gold's more valuable, it's that the dollar's worth less. So we've seen that the dollar's worth less, and that everything has gone up in price in Australia, from housing to transport to childcare to food to gold, but not silver. And there's a question is, well, why not silver? Because conventional economics would say is that if the money supply grows faster than the growth of the product, the price should go up, because like we said in that original show, there's two determining factors of a price. It's either the demand and supply of the product, or it is the unit of account in which you measure that product. And so why is it that this one thing is 42% lower in price given its peak in 1980, and everything else in Australia has gone up?
Yeah, I get, but I still maintain, if you draw a line through this, right, and you draw an average line, you get a completely different story. And therefore, I agree, it hasn't gone up very much, relative to other like gold, but I'm not sure that your initial statement is actually necessarily 100% accurate when you actually take a more data-driven approach.
We will get into that in a subsequent show, but there's a I think it's quite legitimate to look at to be able to say for every commodity, every product in Australia, that we are seeing prices go up, and we are seeing prices going high, except for this one price.
Right.
So why does this one price behave the way it has?
Right. Now, the next point, let's cover it now. You are, of course, directly connected with a silver company, right? You're their
Yes.
chief economist, right? So
Yes.
some people might accuse you of, well, you're spruiking all of this because silver is what you do, right? We have to tackle that sometime, don't we?
Happy to say I've been buying silver for 4 years, and I've been working for a bullion dealer for 2 years. I was never approached. So the job I have as a chief economist for a bullion dealer, they never approached me. I approached them. I have written multiple articles about this. It's all public. I stand by the articles that I write. And one thing I will say is that unlike people in the... See, here's the thing with a real estate agent. When you go into becoming a real estate agent, that is your job. And you've got to spruik property no matter what it is, because that is your career. I've done many things with my career. I've been a public servant, a management consultant. I've been writing for newspapers, etc. So I'm doing what I'm doing in the bullion space because of my analysis. So my analysis has driven me into this industry. And when my analysis says it's time to leave that industry, I will leave it. So I'm not here in bullion for a lifetime because I don't need to be.
Right. So it's a chicken and egg question, right? But essentially what you're saying is that in this case, the interest was driven by your analysis, and then you got into silver, and from there, then you saw an opportunity to have a conversation and becoming connected with the bullion operator.
Exactly.
Okay. I mean, I think that's important for people to understand because, my perspective, you aren't spruiking because like real estate guys, property never goes up, right? There's something much more fundamental here.
Indeed,
Okay.
indeed. And you know what? So, I mean, like I said, I've been buying for 4 years.
Yep.
If the whole audience doesn't want to buy, I couldn't care less.
Yep.
I will continue to buy. and we'll get into the reasons why I'm doing what I'm doing.
Okay.
But again, so I mean, I have no interest in if everyone wants to buy eggs or whatever.
Yep.
They can do whatever they want with their money.
Okay, so let's now go to the key point, right? What you're saying is there is a fundamental supply-demand disruption here, which you really can't explain by standard economics.
Exactly.
Right. So my question is, what the hell's going on then?
Well, so I think there's 2 points to make. 2 points to say, Martin, is when you go and learn about basic economics at a university course, you learn about demand supply, how markets are supposed to work, all of that sort of stuff. Yeah. Now, with what I learned at university and all the subsequent economic research and reading that I've done post-university, what we understand about economics can't explain this price behavior. So I don't think conventional economics gives an answer to this. Now, if an audience member does actually believe that conventional economics can explain this, I invite them to write to me, to write to you, and say, this is how, from an economic theory point of view, here's how this all makes sense. So if someone can say, it works, it's fine. So now, the other point I will make is that someone on social media in the last week, obviously I've taken a very firm position on COVID-19, and we've had some discussions about that sort of position. One person said to me on social media, stop talking about conspiracy theories and start talking and just stick to economics.
Right.
Now, what I will say on this is that if you cannot explain this through economics, there has to be another reason. And the reason that I've come to believe is that we have a conspiracy, a real one, not a fake one, and the conspiracy is that the market is heavily manipulated. And now there are other things that are manipulated in the financial sector. I would say gold is as well.
Yes.
And we do know that the banks have been rigging other things. And for example, we had the LIBOR crisis in the last decade. So there are some examples of manipulation where it has actually been confirmed. And LIBOR is, and I'm not sure if you've done any shows on LIBOR and Walk the World.
Well, the fact that LIBOR's been basically rolled up and thrown away, and then now I've got Sonia and the other things. A lot of the bankers, though, never actually got hit over the head for all the manipulation and the billions and billions of dollars they made.
Yes.
And medium and large companies paid over the odds for their financing because of it.
Yeah.
Major international disgrace, and it's never really been swept up and put away. They've just changed the indices.
Of course, yeah. So there you go. So had we had a discussion about LIBOR before that was coming out, we would be accusing of an international conspiracy to rig that interest rate.
Absolutely. Yes.
And so that's been confirmed.
Yes.
So what I'm saying here is that silver has been heavily manipulated.
So you mean the price of silver?
The main thing is the price, but once you start to dig into what's actually involved in with this price behavior. What I would say is I think it's a internationally coordinated scheme involving multiple players. So for legal reasons, I'm not going to say who, but I would say that I believe that there are certain organisations, institutions in Australia who are involved. Now, why did I say watch the Matrix? Because when you and it goes back to one of our last show, there are conversations and there are things that elites do that are not being disseminated to the public. And obviously, I don't think you can find any mainstream commentary about the price of silver and about the silver market and in terms of this price phenomena. Why is it that we've had this massive explosion in the money supply and yet the price is 40% lower than where it was in 1980? So no one's really talked about it. There's not a lot of understanding about it. Now, half the audience, when they said to me they guessed it was silver, there are a lot of people on the internet talking about this. So you do have to go to the alternative media to get your handle on it. But to get down to the nitty gritty of what's really going on, the scheme is phenomenal. Now, I have a book here that was only published in the last 12 months, and it's called Rigged, Exposing the Largest Financial Fraud in History. And this is all about silver. And it's basically saying that, so this is an independent journalist who went through a whole bunch of information from groups in the United States who have been talking about this, and he came to his own independent view that in his view, I mean, he calls it the silver market the largest financial fraud in the history of the world. So now, the question is it? We'll have to see because I think there are some big things happening in the silver market as well as the gold market. We've seen gold and silver going up about 30% in the last 30 days. There's a range of reasons for why that's happening, and we could potentially see some big things moving forward. Particularly, what I think was phenomenal in terms of the bullion market this year was the announcement of QE to infinity. I mean, that really shook a lot of institutions, a lot of high net worth individuals around the world, and that led to a massive surge in the demand for physical gold and silver, and that's actually had an impact on the market and this international scheme that has been suppressing prices for decades.
And of course, John, the thing about the last month is that the US dollar has actually devalued, which is one of the other factors that's driving the movements.
Indeed.
Okay, John, one of the interesting questions here, of course, is our friend Harry Dent, right?
Yes.
Who is very bearish on markets, very bearish on property, but also very bearish on silver and gold. And in fact, I asked him the other week and he sort of dodged the question a bit, right? So what's your perspective on Harry?
Yes. So Harry came out about a year ago. He actually wrote a book about gold in particular. But he did have a price forecast on silver. So, I mean, we in terms of Australia, well, in terms of US dollar terms, I think today it's $24.50 an ounce, and about a year ago it was about $16 an ounce. Harry said that he expected gold to go to about $700. And silver to go about $4.50, something along that. So he expected with deflation the price to go down
but not immediately. He's always said it'll take some time, so it's likely to go up and then it's going to come down. That's his position.
Yes. Now, what I would say is that what I think our friend Harry hasn't fully come to terms with is how is the price determined? Because once you get into the technical aspects of who determines the price and how that actually works, you have a completely different understanding about the price dynamics. And that was actually one of the articles I wrote this. So I wrote a 2-part series, I think in May, and it goes for about 7,000 words. And one of the things I did do was to actually, in about 4,000 words, explain who determines the price and how and who are the players and what is the mechanism. So you've got a spot market in London, you've got a futures market in New York. They interact with each other. Very, very technical stuff, a lot of jargon. And I would say to our audience, because there are a lot of people involved in the bullion industry, particularly because the price is going up. A lot of our viewers, to be quite frank, have no idea about how the price is set. And I think it's important that people actually try to take the time to actually understand this stuff, because again, there's a lot of risk involved in this, and so we've always said no asset has no risk. Everything has risk.
Yep.
And once you're involved in whether it's property or shares or bullion or cash or whatever the case, or banks or bail-in or this sort of stuff, you have to go to a level of sophistication and detail to fully understand not only what is the opportunity, but what is the risk, and if there is risk, how to mitigate that risk.
And just in terms of thinking about silver for a second, we know that there's the physical, right? So there's actually, the silver itself, right?
Yes.
And then we know that there are futures contracts based on the silver, right?
Yes.
And there are various options and futures all constructed around them.
Yes.
Right? And then you've got EFTs that are actually wired into them as well, right? And then you've got essentially opportunities to arbitrage one to the other. Right?
Yes.
And if you add up all of the electronic contracts, it's way bigger than the physical.
Yes.
By a factor of...
You know what? There was a video that was released by an economist in America, and he said that the factor is about 500 to 1.
Okay, even way more, right?
Yes.
That's the point, right? So, and what I keep saying about all of these markets is the relationship between the physical and all of these other markets that are going on, right? And the multiplier effects makes it hugely complicated, right?
Yes.
And I believe the industry generally likes that confusion, because the small number of people in the know can benefit.
Indeed.
And the millions and millions of other people may not benefit.
Yes.
And I see that in gold. I think I see that in silver. I see that in a lot of the interest rate and currency manipulation as well, because it's all the same.
Yes. So, so absolutely. There is a group of elites who are rigging things. If you don't understand the game of the elites, you can lose a lot of money. You can be burnt. At one point I will make is that there's been a lot of chatter about mining shares in particular, and I've had a few members of the audience ask me about mining shares, and I have said to people, these are very volatile shares. You can lose a lot of money if you don't know what you're doing, so I actually spoke to someone today. I said, don't even touch it. If you actually haven't educated yourself, and I've been reading this stuff for 4 years, so it does take a lot of time to actually get familiar with involving yourself in all of this. And if you actually haven't done your homework, you're better off not getting involved at all.
Well, I've got another question then, John, is if this is going on, and there is some sort of conspiracy, why is it that the players in the industry are so quiet about it?
Well, that is a very good question. It took me some time to realize that if you are seeing banks or governments or central banks or bullion dealers or refiners or mints not talking about this, not talking about this price action, and not talking about some of these anomalies that you see in the market, maybe there is something more to see there. And so obviously that's kind of why the matrix is important, because we're not just talking about to my mind, to fully understand its full dimensions, you have to think about this in a completely different way to how you have been trained to think by conventional means. So that is one element of why I said this is going to change your life. Now, again, we will talk about this sooner rather than later, because I think there's some things that are happening which we will be talking with the audience once those happen. But you know, if you can fully understand what's really happening with silver, you know, it can change your life in a few different ways.
Yeah, but I think what we can say, John, is that perhaps the artificial depression of the price is running out of smoke, and some of those players are now more interested in the physical silver than they were previously.
Yes. You know, in terms of the scheme, so there were some technical things that happened in late March once QE to infinity was announced.
Yep.
That led to some cracks in terms of the scheme, and so there's been a lot of scrambling over the last 5 to 6 months, particularly in terms of some of these banks and some of that trying to keep things under wraps is one of the reasons why the price has been going up so dramatically. So, you know, I think one of the important points to understand, and so I came at gold and silver from an economic point of view, looking at the role of gold and silver in terms of economic history, and obviously gold and silver has played a huge role in the history of England and the sterling, all of this sort of stuff. But so there's a lot of commentators out there who try to explain this stuff using conventional economics, and you know, even I would say people like Mike Maloney, he did a silver video about silver the other day. He talked about the history of money. That doesn't explain this. So that gives you a general context, but to actually get into the nitty-gritty of why these prices are moving the way they are, you know, you have to go into the specific mechanism that they're using, and actually getting an understanding of, you know, what are these banks doing at a technical level. And that'd be the same with LIBOR. They were doing some very technical things, and conventional economics or economic history just couldn't explain what was happening on a daily basis.
Yeah, and basically, because we're not going to go into a whole lot of detail in this conversation, I think, as to precisely how it's done.
Yes.
Right? But things like the multiplication factors that I mentioned earlier on between the, you know, the various contracts and the underlying, right? Things like the supply and demand and basically trading before they need to deliver, all of those things, right, allows them to make a lot of money on the way through, but also control the price.
Yes.
And those who control the price and know how to control the price essentially are able to trade at will and are able to generate excess profits on an ongoing basis.
Yes.
And that, for me, in a nutshell, is what I see, not just here, but in interest rates and in currencies as well, and in gold as well.
Indeed. So now the question on that is that can that keep on going in perpetuity?
Exactly.
That's
the big question.
Yeah, that is the big question, because if they can't do it in perpetuity, something happens dramatically to the price.
Yeah.
So we'll get into that in a subsequent episode.
Yeah.
But that is the $64 million question. Will this scheme, this scam, this manipulation activity, will it go on forever? Will it come to an end? And if it does come to an end, when, and what are the consequences?
Yeah, and where might it end up, right? And who gets bruised in the process? And it's also worth saying, John, isn't it, that as these momentums are moving quite quickly, a lot of people are out of position, and so the stresses and strains in the scheme, as it were, actually start to show.
Yes, and yeah. So I do have an article. So the 23rd and 24th of March, in particular, there were some big issues with some of these banks in London, and HSBC lost $200 million. They lost $200 million in a day. So there's a number of technical reasons why that happened. But since March, we have seen a lot of those. The cracks started opening up, and those cracks have continued to open up over the last few months. Yeah.
And just to broaden the conversation slightly, this is precisely why I'm very concerned about the whole derivatives sector, right? Because you're seeing similar things and similar cracks in multiple places now across the financial system, right? and the total sum of all the derivatives that are out there, all of these wages and hedges against different commodities and different interest rates and currencies, the more it goes wrong, the harder it is to try and put it all back in the box again.
Yes.
And the question is it going to be able to be put back in the box, or is it going to go boom?
Yes, and so the point I'll just make on that, because I've had, since our last show about bail-in, I've had a lot of questions about this, about the likelihood of bail-in, particularly on derivatives. If it goes boom, and the central banks can't control it, that's enough to bring down the whole system.
Yep.
And the whole system includes our banks. And if they run out of capital, are they going to print to infinity, and have hyperinflation, or are they actually going to have bail-in to limit the financial exposure of the RBA and the government? And that's obviously what APRA doesn't want to actually answer. I mean, the critical question with APRA is, once you run out of capital, what do you do?
Yes.
And they keep on avoiding that question.
They do. I wonder why that is. But that's a conversation for another show. Now, do you want to leave some questions for the audience then? In terms of
yes. We're going to move on to a couple of more economic economic oriented shows, particularly about stagflation, Japan.
Yep.
But so I'm going to leave a series of questions for the audience to chew on. And if people want to email me their answers or even look into this, feel free. Because one of the things I think is important with this, Martin, is I think the audience, particularly those who don't believe in conspiracy theories, and there are some, they need to work through these questions and find the answer themselves. So I think if people, rather than being told the answer, if they find it themselves, they'll come to believe what I believe. And again, if someone says I'm wrong, show me where I'm wrong. So happy to be proven wrong on that. So let's put this up on the screen. So I'm going to leave you with the audience a few questions, so that they can chew on this. So question one: what has been happening that would allow the paradox to occur? So we've touched on that a little bit, but there's a lot more to it. Which international organisations are involved? Which media companies have been running fake stories for years to conceal the paradox and those involved in the paradox? Which precious metal dealers in Australia are part of an international syndicate that has allowed the paradox to occur? What techniques and products have Australian precious metal dealers been selling to Australians to facilitate the paradox occurring? How can viewers take advantage of the paradox? Let the audience chew on these questions for a bit, and obviously let them have a think about this thing for a while. There's obviously a whole bunch of other channels, a lot of other people talking about this. Particularly a lot of channels from the United States, but we don't shy away from any difficult financial or economic topic, and we'll come back to this. The answer to the great paradox is silver.
John, I appreciate it today. Very interesting conversation to be continued.
Yes.
Martin North, John Adams, The Interest of the People. We'll see you next time.